Hello. Let's see. Hello, hello. Let me get Angelo on. Hi, everyone. Okay, Angelo, how do I do this? Oh, there we go.
I've never done it.
We did it. How are you?
Good. What's up?
What's up? This real estate market is what's up. It's crazy right now.
No,
Oh
right?
my gosh.
Today's been a day, man. Today's been a day.
Yeah, putting out fires, closing deals.
Trying to. Yeah, yeah. Definitely was pretty busy today, but it's all good though. I enjoy my job.
Me too. Everybody needs a home, right?
Exactly. Exactly.
Oh,
I like this live thing though. This was a good idea.
there. I can hear you. So everybody, you guys can hear us all right? It looks like it. I'm getting high.
Yeah.
Hi, everybody. Okay, great. Well, I really wanted to talk to you because I get asked all the time questions that are really not my expertise. And, the biggest thing of buying a home is the loan. And, I usually just go, let me give you Angelo's number. And I just think it's just great to have some kind of, dialogue to just walk through the process from like beginning to the escrow, just to help people understand, how easy it is, what's required, and a little bit about yourself. And I think it's really big about like, especially right now, the difference between like you were with Bank of America at first, and now you're with Commerce, and just the difference between a bank lender and a non-bank. So tell us.
Yeah. I'll start with like a brief introduction of my background while we wait, see if some more people join before I go over the whole mortgage process. But so yeah, I've been doing for man almost 5 years now. Right out of college, I got into banking. I started out as a personal banker. I've worked at a lot of the bigger banks. I've worked at a lot of banks during my career, but so right now I'm a Commerce Home Mortgage. I'm a mortgage advisor, senior mortgage advisor. I've been with Commerce. I started with Commerce at the beginning of this year. But going back to the beginning of my mortgage career, I was at Bank of California, Bank Home Loans. So the management team from Bank Home Loans is now running Commerce Home Mortgage. So it's kind of like you know, a reunion with the management team and everybody there. So I feel real comfortable now, and that's why our loans are going through a lot faster. We're providing the great rates, and we have all the programs that a lot of the bigger banks don't have, which I can get into in a little bit. That's a little bit about myself. I grew up playing sports. I played football in college. I went to Arizona State University. Before that, I actually spent 2 years at Idaho State University, which probably no one knows where that's at. It's in Pocatello, Idaho. Fun fact for you. Um, but yeah, so I always had a love for real estate and I always had a love for finance. So doing mortgages kind of has the best of both worlds.
Um, so for me, I did a little video last night just telling people like I always get people who want to look at a home first and, think, oh, I could possibly qualify for this. And, they start, I feel like, a little backwards, and it takes a lot longer to do things because they don't go to a lender, or, I like to refer people out because the relationship with the lenders are so important. But I just wanted you to break down, like, when someone comes to talk to you, like, what are the basic things that they need to have in their possession to get the pre-approval process started?
Yeah, definitely. So the first thing you want to do before you start even going on Zillow, going online, going on Google, looking for houses, before you contact, well, when you contact Brittany, she's probably going to ask you to do this, but you want to get a pre-approval just so you know how much you can afford, right? So no matter how great the house is you see online, if you can't afford that house, it can be discouraging, and sometimes you're wasting time, right? So it's good to have a plan from the beginning. When you come to me, depending on what type of depending on your current employment, there's going to be different documents that are needed, right? So if you're a salary employee, it's pretty simple. We look at what your salary is. So we look at your last 30 days of pay stubs. we look at your 2019 and 2018 W-2, and we get your income. So salary, say you have a salary of whatever your base salary is, right? We divide that number by 12, that's your monthly income. It's very simple when you're on the salary. If you're a salary employee, but you say you work overtime or you make commissions or you get bonuses, the bonuses, the overtime, the commissions, we have to average over a 2-year period. So say, hey, you're making a ton of overtime pay right now for whatever reason, right? That doesn't mean we can use all of that overtime income as your current income. You have to average it over 2 years. But whatever your salary is, we can use that pretty much right away. Even if you haven't been at that job for 2 years, as long as you've been there for 6 months, we can use that income. If you came straight out of college and you just started a salary job, we can use that income immediately. All we need is 2 pay stubs. So,
So the 2 years is not necessary anymore.
so especially if you came out of college, say you just come out of college, you don't need a 2-year work history. If you came out of college and you start a salary job, we can pre-qualify you just with your salary offer letter. You can be in escrow at just starting a job. All we need is your 2 pay stubs. So we get the 15th pay stub and we get the pay stub on the 30th, however you get paid, right? So a lot of people think you need a 2-year history, but especially if you're just coming out of college, you don't need a 2-year history if you're a salary employee. Self-employed is very, very different. And I know in our market in LA, we deal with a lot of self-employed entrepreneurs doing all kind of crazy things on their tax returns. Yeah, you're
I got it bad.
exactly. So we're in the same boat. I'm commission-based pay. You're commission-based pay. It definitely is definitely different. So I'll get into self-employment a little bit too. So always when you're self-employed, the traditional underwriting guidelines when you're self-employed is we take a 2-year history of your income. So if you just started your business this year and you say you filed 2019 tax returns, so say you started in 2019, you filed 1-year tax return, so you have a 2019 tax return, we can't qualify you for that income yet. We have to have 2 years of tax returns. So I get a lot of conversations with people that are self-employed that, hey, I'm making 10, 20 grand a month right now. I say, okay, well, what's your net income? Because first of all, we look at the net income on your tax return, not the gross. So that's a key thing that a lot of people get stuck on. So what we do is we look at your net income for the last 2 years. So if you got qualified right now, right, it'll be, okay, let me see your 2019 and 2018 tax returns, right? We got to look at the net income. So we average that over the 2 years. So we add it up. If your net income in 2019 is less than 2018, we can't even average it. We have to go off of 2019, right? And then your 2020 income is pretty much just to support your prior income that you had over the last 2 years. So it's very, very different when you're self-employed. I work with, like I said, tons of self-employed bars. I love working with them. But it is different. And in some ways, it's a little easier for salary employees to qualify, right? Because self-employed, we want to write everything off. I mean, you want to pay as little tax as possible, right? Because you want to write off business expenses, which can definitely take down your net. So again, you might be making 10, 20 grand a month, but on that tax return, it more than likely is going to show a bit less, right? So that comes in mind if you're looking to buy a house in the future, right? You need to speak with a lender, whether it's me or whoever it is, and say, hey, what do I need to prepare for? What kind of income do I need to be showing on my tax returns? What goal do I need to set in order to qualify for this purchase price? So self-employed definitely is a little bit difficult, not difficult, but more complex than a salary employee.
Net, and for everybody, just to break down, net is like, what you're actually taking home after all the expenses, after all the write-offs. As a self-employed person myself, I've been writing everything off because, who wants to pay the tax? It's like either you're going to pay IRS taxes or you're going to lose on your loan, because what happens? You end up getting a higher interest rate, or what happens in those cases when you don't show enough money?
So there are options, right? Part of the benefit of being where I'm at Commerce Home Mortgage, which is a non-bank lender, right? Some of the benefits of being where I'm at is we have what's called portfolio products that are catered or they're created for self-employed bars that maybe aren't showing the best amount of net income, but they're making a ton of money, right? So, for example, there's a program that I've used many times. It's called a bank statement program that looks at the income going in your bank statements over the last 12 months. And that's how we get your monthly income instead of looking at the tax returns, right? So, but the only thing with these programs it does allow you to get a house, right? It does allow you to qualify before using your tax returns, but the interest rates are higher. So interest rates are anywhere from 1.5% to 1.5% to 2.5% higher than if you were to qualify a traditional route. But like I said, I've done plenty of these loans. So say you just started your business, right? You've had 12 months of bank statements that show, okay, you're making a good income, but maybe your tax returns don't support that yet. What people do is they use this loan, the bank statement loan, they get into a house, and then once the tax returns do support the income, they refinance to get a lower rate.
What, like 2 years?
Hold on, you cut off a little bit.
Finance in 2 years?
I'm sorry, it keeps cutting off. I see you talking, but I don't hear you talking. I can't hear you to the end.
Is this better? I had my earphones on.
Yeah, I can hear you.
Can you,
What was it?
can you hear me now? I said, in refinance in what, like 2 years? Is it usually takes like a minimum of 2 years before you can refinance, or how long does it
Yeah,
take?
on how where you're at with the current tax return. Right? If you don't have any tax returns at all, you're going to need 2 years, right? If you have
Hmm.
1 year, you just need to wait an additional year. But we are
Hmm.
new products as we speak. We had a lot of product before COVID, which I can kind of the COVID time. But we have now pretty much all their products are changing and slowly coming back. So rule of thumb, you're going to need 2 full years of tax returns. Yeah.
Okay. 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 Also want to talk about credit scores. That's always a big thing. There's people, credit is different. And I know this point thing makes a difference too. Like, what is the ideal credit score you need to get the best rate?
Well, the higher the score, the better the rate is going to be, right? So I can do loans. I can do FHA loans all the way down to 5 cycle. Um, so you would definitely want to be on the higher end. Right? So typically, once you get over 740, is when you get the, I guess, the top tier rates. 760 is even better. 780 even better. Under best rates possible. But like I said, just because you have a lower rate, you should not be discouraged from actually trying to buy a home because of
Mm.
right now. There's lots of different things we can do with lender credits and concessions to give you a good rate, even if you have a lower FICO. If you're a first-time home buyer under 700, 5,000 Angeles, we can go all the way down to a 580 FICO score. Okay?
Mm.
And if you want to do a conventional loan, so a family, go all the way down to FICO. And I do tons of loans.
Mm.
Of course, I'm still at a good rate. FHA is a little bit more generous on interest when it comes to your FICO. If you have a low 600, get a really good rate with FHA.
Uh-huh. That's good to know. I did not know that. Okay. I want to understand, like, my biggest whoa moment with you was this last deal we did together where you saved my client $9,000. Like, guys, I almost lost the deal. Like, my client saw this closing statement and all these fees that, we get this pre-approval. They've got the cash, but you don't really understand the fees until you're in escrow and they give you the statement, right? The loan estimate. And he was like, I can't afford it. This is too much. And I'm like, hold on, let's check with Angelo. And you were
Yeah.
able to do something like, please explain, like, what is it that makes you so different than, these commercial and these big time lenders out there that you see, with the online presence. But, yours may be someone that this company is someone that people don't hear about much, but you're able to save people tons of money. How can you do it? How do you do it?
Yeah, so that scenario was interesting, right? Because I remember you had posted something about going into escrow, and I shot you over a text immediately. I said, hey, just so you know, my bank's having right now on purchase. If your buyer wants a second opinion, let me know. And you said, okay, cool. And a couple of days later, you said, my buyer actually does.
So true.
My
Okay.
back. Yeah, you said your buyer actually did want, right? So the way I saved this borrower money because he was being charged what's called points. So a lot of the times when you do the commercial online from like the big banks, Quicken Loans, Loan Depot, right? Get this great rate, blah, 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 right? What they don't mention to you is sometimes when they're giving you these rates, they're charging what's called points. So what a point is, 1 point is 1% of the loan. So if you have a $500,000 loan, they charge you 1 point. They're going to charge you $5,000 on top of your closing cost. So when you first go into escrow, I say 2 to 3 days after you go into escrow, you get called your initial loan closure, right? And there's something in there that's very important called a loan estimate. And then the loan estimate breaks down all of the fees that you're going to be paying, right? So closing costs typically are about 2% of the purchase price of your home. You should just expect to pay 2%, rule of thumb, and closing costs. A lot of people forget about closing costs, right? But what you don't want to have to do is pay extra points if you can avoid it. So your car, I wanted to know, it was with Quicken Loans, right? It was a big bank with Quicken Loans, commercials all every day about Quicken Loans. It's a great bank, do a lot of business, they're killing it, right? But a local bank like Commerce Home Mortgage might be able to get a better deal. In this case, right? So I said, hey, loan estimate. He was being charged 2.5 points, almost $10,000 worth in points for the same rate I can provide him no points. So immediately I saved him $9,000 immediately. So just by getting a second opinion, and like when you think about that, like when you're buying a home and you're budgeting and you're money for a down payment, like how huge is the $10,000 or $9,000? That goes a long way. Now $9,000 and apply it to get furniture, rehab the house, that house, right? Or for reserves, whatever the case may be. When you're buying a new home, a lot of stuff pop up, especially for homeowners that maybe you didn't expect. And it's good to have that money, just so you can make those repairs or whatever kind of emergency pop. But in that scenario, I was super glad that I reached out to you because I mean that was instant savings.
That's crazy. So they were getting charged 2 points, and you were able to not charge any points.
Yes, no points, right? So like instant savings, and it wasn't. Their bank's not going to give a better loan than my bank, right? It's nothing like that. My customer service, more than likely, I think I did a good job. It's going to be better than a big bank like, right?
Right.
Saving money, right?
Mm-hmm.
Advertisers, and it's always important to get a second opinion. Unless you started with me, then I'm gonna give you the best rate. Now I'm just playing.
Of course.
With me, and you want to get a second, I don't blame you. If you're trying to buy a house, you want to possible, you get the best deal possible. But so that was the scenario. I'm just happy. That's what I've been doing lately. If I see what's going on, I reach out and say, hey, if you have an opinion, I'll be more than happy to give it to you, see if we can save your borrower some money. And the thing when that happens, so for you, from an agent, you saving your client $9,000, that client for life.
Right.
They're gonna know you always have their best interest in mind. So I mean, it not only helps the borrower, it helps the agents on here. It definitely goes a long way.
I agree. And it's okay, of course, we're dealing in a pandemic still. It's COVID. Like, what has been the major changes in lending since COVID, if any?
Yeah, so when COVID first hit, we first got locked down in March. From March all the way through every week, almost daily, there was some type of email about how programs are changing, right? We're getting rid of this program. This program's becoming tighter. You have to have a better for. So my bank less than others. The main thing that my lost was portfolio products. So the bank loans, the outside box, right? Where other banks, bigger banks, more say that the banks you see on the corner, right? BA, check, Fargo, great banks, wrong with them, but they tightened up their guidelines more, so their FICO score is higher. So even if the guideline says you can do a 580 FICO score, now they say, okay, well that's fine, but this bank, our bank, requires a 620 or a 640 or whatever the case may be, right? Where so that happened immediately. So now the housing market everyone kind of uncertain at first, but then the housing market just took off, took off crazy. I know you feel it.
Mm-hmm.
Off, right? So guidelines are starting to loosen up. Programs are starting to back in. But from the lending perspective, you probably saw a lot of articles about, hey, they're tightening guidelines and you need higher FICO score, more money down. Where my bank to brag or anything, but Commerce, we really didn't change too much when it came to the FICO score or the money down. We just kind of lost the unique outside of the box portfolio products. But those are all coming back out, and scores are still very low FICO. But that was the biggest thing was definitely more money down and higher.
Mm, that's right. I also saw like a lot of, people that you would get in escrow and then they would fall out and they would say, oh, due to COVID, that was, due to the loan in COVID. And I'm like, I've heard that, lenders are now doing an extra employment verification right when you close, and that's been making people like lose out on the homes. Have you seen a lot of that, or is that something you guys do?
Yeah, I mean, so I haven't, me personally, luckily, I haven't lost a lot of deals like that. But what was happening is people were in escrow and they were losing their jobs a lot of the times, right? It's sad to say, but people were losing their jobs. So immediately, either they were losing their jobs or the program the bank was offering, they no longer offered, right? So those are the two that are the most common things that happen. So when people were losing their jobs, they were being cut off or being, we could no longer be to qualify, right? So that's banks now, they're getting verification of employment all the way up to the last day of closing that the client still has a job. So you've been furloughed or been laid off, or say you've been self-employed and you're not making the same kind of income you're making pre-COVID. Banks are definitely going to look into that, and that's something that can stop the deal from going through. Another thing that was happening too, like I said, banks were just losing programs. So I've had a couple of agents in escrow. They going with a different bank, and the bank that we're no longer on that program. We can't do the loan. So that's that's happening less now.
Okay.
That was something that was common.
Nice. And I just saw something like these rates are going to be here, right, for is it backed for 4 years, this low interest rates? Is that true? Did the Fed's Reserve say that?
So I can't predict where rates are going to be. I can say for the next year or so, rates are going to be low, if not lower. No one can really tell where the rates are going to go, right? But if I had to guess, I would say the rates are going to remain low all the way to 2020. If I had to guess, right?
To when you are breaking up, and I see that on the notes. Till to when? Till 2000 when?
Let me see. Is that better? I don't. Is it?
Now,
Or is it my video quality?
no, not the video quality, just sometimes every other word kind of thing. It goes out, but I can hear you now. So,
So yeah, I was saying that. Yeah, I predict the rates are going to be as low as they are now, not lower all the way through 2022.
2022.
Predict the future. So if you are looking for a refinance or house, it is important to lock the rate whenever you can, right? Because you don't want, because no one knows. For all we know, the rates can back up. But yes, I would say they're going to stay low all the way through 2020.
All right, we got some time. And let's see. I had another. I'm going back. Okay. I get this a lot too. Like people, doing the math in their head. Okay, it's a $1 million home. I'm going to put 10% down and that's it. But what you brought up a good point, and you said that 3%, when you gave that 3% number, you have to add an additional 3% to the purchase price. And that's including escrow and lender fees in that 3%?
So it's usually 2%. So
2%. Okay.
down payment is 3%, right? Typically, what you're going to find is that closing costs about 2% of the home purchase. So, and closing costs are going to consist of title and escrow fee. It's going to be an escrow and title company that are handling your file. Typically, the seller will pick the title and escrow company that they're going to use, and they send over their set of fees. There's going to be a processing and underwriting fee. There's going to be an appraisal fee. So these are all things to keep in mind, right? So the one way to kind of help with paying closing costs, take a little bit of a higher rate, or ask for a concession, or ask for the credits to cover a portion of your closing costs. So say the going rate is 2.75, right? So I'll say, hey, I can get you 2.75 at par, which means no points, right? No points. We're not charging you a point, but we're also not giving you anything to help with your closing costs. Or you can take, let's say, 3%, and I'll give you, I don't know, a couple $1,000 towards your closing costs. There's times where I've literally covered the entire closing cost for a bar just by increasing the rate a quarter. Um,
Mm,
Way, right? So when I have a buyer speak and we talk about what the best route is going to be, because it's not always good to increase the rate to get a little credit for closing costs. But if the numbers make sense, that is an option.
okay. And so for, I see, I am Lolo 25 asks, what are the rates right now? You're saying 2.75 is the going rate?
So it really doesn't it's hard. So 2.75 is definitely a rate that's out there, right?
Mhm.
But every scenario is going to be different. But I hate to just quote rates because
Right.
going to be different, but I will tell you that on a 30-year fixed, we've seen all the way from 2.5% to low 3%, 3.5, 3.7. So, and it will depend on how much you're putting down and what you're fighting. But there's a good chance you can get under 3%.
Okay. Oh, which is amazing. I mean, what last year was about 5%, in percentage points from now to last year, 2 percentage points is what? Would you say 50, 20,000? Like it could be like that much you're saving per year, correct?
It's a lot for sure. I mean, most rates last year about 4.5%. I've had clients that I've literally refinanced 2 times this year already. At the beginning of the year, I refinanced below 3%, and then now I'm refinancing them into the middle 2% range, right? So there's definitely a benefit to these low rates, and people should definitely take advantage of them.
Definitely. It's just awesome. Okay, okay. You guys, do you have any questions out there regarding the loan process or any real estate questions? Love to answer them. And I'm gonna make sure I got all of my. Okay. Also want to know the process. So now we're in escrow. We got the approval. There are steps, there's steps that people take, right? Once we're in escrow for the loan, we got this loan approval, and that may make you feel like you're good to go, but there's still some hurdles, right? Like every time I get my client into escrow, I'm like, we still have these 3 things that need to happen before we can actually close. Like I never feel like it's really there because there's this extra underwriting step. And I want to know, like, if you have an approval, what is that difference that, where, as agents, we're holding our breath to make sure that the client passes through this second underwriting phase that happens once you're in escrow?
Yeah, so when we do a pre-approval, we try to do what's called a fully underwritten pre-approval, where we run it through automatic underwriting, or we go a step further and have an underwriter actually look at the file before we give you the letter, right? But so say you get your offer accepted. The process takes about 4 weeks, right? About 30 days to close this loan. That's
Hmm.
a full purchase transaction. We did our loan a little quicker, right? Because typically you can expect 30 days, right?
You rushed it for sure.
Yeah,
Yes.
yeah, definitely. But week one, you pretty much you get your initial loan disclosures. I send over a list of items that we need, right? So even if you did a pre-approval a month ago, right, and you gave me all your financial pay stubs, your bank statements, everything, and you go into escrow next month, we're going to need updated everything, right? So if something's changed, that could potentially affect your pre-approval. So I ask for everything again, and then what happens is we give you initial loan disclosures we just went over. We look at everything, make sure everything looks okay. Um, and that same 1 to 3 day period of you first going into escrow, we order your appraisal. So that's a big thing. The appraisal needs to come in hopefully at value or above value. If it comes in lower than the purchase contract, your agent, Brittany, would have to go back and try to negotiate the purchase price lower, or
Yes.
the buyer has to come in with the additional money. And sometimes that could potentially kill the deal. So the appraisal is huge. Um, so we get the appraisal, then we submit your loan to underwriting, right? So there's 2 rounds of underwriting. Typically, there's 2 rounds of underwriting. The first round is going to be your conditional approval. The underwriter is pretty much going to look at everything and say, okay, this checks all the boxes, you're approved. I say,
Okay.
buyer, congratulations, you've been approved. these are the conditions that you need for final approval. And what I typically recommend, and what I try to do in almost all, what I
Uh-uh.
typically recommend on all my transactions is try to hold on to that loan contingency until you get the final approval. I mean, you can definitely release it as long as your loan officer says there's nothing big that I see coming up. But I try to, if you can, keep that loan contingency on until you get your final approval, right? So it will say, hey, you know what, you have an approval, but we need an updated pay stub. Or, hey, we need an updated bank statement. Hey, you have a large deposit going into your bank statement on this date. Can you please explain what that deposit was from? There's going to be a few questions like that that I'm going to have to get from you and submit back to the underwriting for final approval. So you usually get the final approval towards the end of the second week or like the beginning of the third week, right? Or end of the third. And one thing I want to stress, do not open up any new credit accounts while you're in escrow. So don't go apply for a new credit card. Don't go buy a new car. Really, if you don't have a car, take the bus for that month. Take Uber, take whatever you need to do. Don't buy a new car during that time because it can kill the entire deal. What
Okay.
happens is if you apply for any credit while you're in that 30-day window, right? The bank is going to find out about it. Person, the life of a loan officer, people are going to
Mm,
call you over and over and over again sometimes. But anyways,
okay.
what happens is when you submit your loan to underwriting, and say if you get some type of, say you get a new car, right? You might think, oh, I get a new car, the bank will never find out about it. But the bank's going to find out because they do a credit check right before you close. And if they see any new inquiries from that credit check, they're going
Hmm.
to say, what was it? What was this inquiry from BMW, right? Oh, I got a new car. Okay, well, what's that new payment? Now we got to calculate that new payment and pretty much start from square one to see if you qualify. So not only can it delay your deal, but it can kill your deal. So let's say everything goes smooth, right? And we get the final approval, the appraisal came in at the value that we needed. Then we get your closing disclosure out. And it's very important because you're going to see so it's going to be your loan estimate, but it's going to have final pieces of fees on there, right? So you're going to look through it, make sure everything looks okay. You sign that, and then 3 days after you sign the closing disclosure, you sign your final loan docs. You sign your final loan docs with a notary. A notary comes to your house or wherever you're at. I mean, that's a good feeling, right? They go,
That's when I can exhale because that means it's gonna close when the loan docs are issued.
yeah.
Yeah.
But even then, when you sign your final loan docs, do not get a new car or a new credit card or anything until that loan funds, until you have the keys to your house.
Uh,
And because that's happened too
Beautiful.
before you sign final loan docs, and literally got the same car that day, and their loan got canceled because they were no longer approved. So I'm just telling you, don't do it.
Don't buy anything. I say don't do anything. Underwriters are like the FBI. I always say they're like FBI agents. Like they'll find everything. Just let it go.
Exactly, exactly. So yeah, so that's kind of the end of the process. Once you
Yeah.
find the final loan docs, we fund your loan the next day, and then you get the keys to your house. Typically, the day after that, depending on what day of the week this all happens, right?
Yes, yes. And so also a lot of people ask too, in terms of getting, once they fill out your application and submit everything, how long does it take to get this pre-approval letter?
So I always say it takes about 1 to 2 business days for a pre-approval once you send me all your documentation, right? Some,
Hmm.
Sometimes it's same day. It just depends, but I always say at least give me 1 to 2 business days for your pre-approval.
And how long does that last for?
90 days, unless something your job where your pay has decreased or you've lost your job, then you need to update me on that because it can definitely change your pre-approval. But a credit report is good for 90 days. So that pre-approval is going to be good for 90 days. If we get out of that window, we're going to have to pull your credit again. If your credit score has decreased or increased, or you've had new liabilities, we've got to look at all that.
Which the 90 days is more than enough time to find a home. I mean, like that's usually, it takes a good 30 days to check out the scenery, the neighborhoods. You're going to start writing offers another month, and right at that 90-day, you should be in escrow. In this market, it's a lot slower right now with low inventory. But that's great. Okay. Oh, another thing I think that is also a lot of people don't know is the type of money that you qualify for differs depending on the type of property you buy. Like, what's the difference in the amount that you would get approved for, whether it be a single family condo or a multi-unit home? How do those amounts change?
Okay, so single family is pretty straightforward, right? There's very few single family homes that have an HOA. Sometimes the new construction homes do. But so if I said, hey, you're pre-approved for a $500,000 amount on a single family home, sometimes it would be okay, but the 450,000 condo because you have to add in that HOA fee. A lot of times, sometimes LA are pretty expensive. They're anywhere from 200 to $600-700, right? So definitely take a toll on how much you're approved for. So hey, if you're buying a single family home, no HOA is 500,000. If you're buying a condo that has a HOA, it's going to be 450,000. If it has a condo with $1,000 HOA, it could be even less. It could be $400,000. So I try to give people an idea of, hey, if you're looking at condo, this is the way you try to stay underneath. If it's anything higher than that, you might need to lower your pre-approval amount. And then when it comes to multifamily homes, you're looking at a duplex, a triplex, or a fourplex,
Hmm.
vary on your pre-approval based on how much the rent, the other units that you're not going to live in can bring in rents. Because what happens is if you live in one unit, right, you buy a fourplex, you live in one unit, you can use the rental income from the other to help you qualify. So I might say, hey, you qualify for $1 million. Hey, Angelo, I'm looking for a duplex. Okay, you qualify for $1 million duplex, but that second unit needs to bring in at least $2,000 or $3,000 in rent for that $1 million price. If it brings in less, your pre-approval amount is going to go in lower. So when I have a conversation with somebody, I just ask them what their goal is, what they're trying to accomplish, what type of property they buy, and then we kind of formulate a game plan from there.
I think that's always a little heartbreaking for people to understand that you actually qualify for less money with the condo with that HOA fee, the most with an income property, right? Because your rent is being built into your purchase price, so you get almost double about for an income property, and then in the middle somewhere is a single family home,
Yeah,
correct?
yeah. The multifamily, the rule of we can use 75% of the rent that unit brings in towards your income to help you qualify.
That's awesome. That's awesome.
Long way for sure.
I love it. Okay, so like rules of advice, like things that you must do, have to leave these people with getting an approval now versus waiting till it's too late and these rates go insanely high and they lose on their money.
Yeah, I would say even if I say you're pre-approved for a $500,000 or say $1 million purchase price, I'm going to tell you what that payment's going to look like. So just because you're approved for a certain price doesn't mean you can necessarily afford it or you're comfortable making that payment. So
Mm,
say you're approved for a $500,000 purchase price. Here's your payment. Make sure that's something that you're comfortable with. But just because you can be approved for a certain price point doesn't mean you want to jump and buy the most expensive house you can afford. Because at the end of the day, you're going to be stuck with that payment whether you continue your same job or you don't lose a job. But who knows what's going to happen, right? But make sure it's a payment that you're comfortable with. And number two is just get with people that you trust because you're going to see a lot of. One sec. So just get with somebody that you trust and you feel like has your best interest in heart, because a lot of the advertisements you see online are not always true. They have hidden fees, like we spoke about earlier with the point, right, or whatever the case may be. So
hmm.
make sure you trust that person, whether it's the agent and the lender, and make sure in this market you're working with someone that answer your phone calls, answer your text message in a timely manner, because the market is really, really, really hot right now in LA, and most houses have multiple offers in the first week if they're priced correctly. So what happens is you need to be extremely competitive and extremely efficient in terms of closing your loan if you do get an offer accepted.
I agree with that. And for me, whether you work with me or anyone else, it's so important that, your agent has that relationship or even tries to establish a relationship with the lender, because I always need the cell phone. Like things happen so quick and you get lost in these big companies. It's like, oh, I'm going to transfer you to this department and that department, and you can't get it to anybody. And it just makes for such a horrible process. So to have you on my speed dial and call, it's a
Yeah.
great thing. And I appreciate you always answer, you always respond, you're always problem solving. So thank you. And I see, hold on, another great point about being comfortable with your payment. Yes, it's so true. Like I've seen that multiple times where people can qualify for 1 million, but they're like, we're not comfortable paying that mortgage payment. And the loan amount says 1 million on it. And I feel like, it looks good, whatever. But in their mind, we know like they're not going over 850 or 900,000, which, is so important to understand your monthly payment.
Yeah. One thing before I go, the mortgage payment is not just what you pay to the bank, right? Your mortgage payment, your whole monthly housing payment, called principal, interest, taxes, and insurance. It's PITI. So you
Mhm.
owe an interest to the bank. And you can't forget about property taxes, which in LA is 1.25% of the purchase price divided by 12, right? At the bank, or you pay it 2 times if you pay it by yourself. And then you also have homeowners insurance, which is another $50 to $100. So
Mhm.
you got to make sure you understand your full payment, because once you get that, you get the principal, interest, you get taxes, insurance. If you buy a condo, you get the HOA. You definitely want to make sure you're understanding your complete.
Is there a good or bad versus whether you decide to make your taxes within your mortgage payment or paying it in the quarterly payment and plan? Is there a difference?
Yeah, so you have an option of paying it lender. It's called an impound account, or you can pay it separate times a year to the city of LA or wherever you're buying your house in, right? So some
Uh-huh.
people don't have a choice. If you're putting down 3%, if you're putting down less than 20%, you don't have a choice. We're going to collect an impound account. You have
Mhm.
to the bank and your interest to the bank, and then we disperse them when they're due. If you put
Okay.
20%, you can choose, and it really just what you prefer. Some people like having it all in one spot, so they budget it over the 12 months instead of having to come out of pocket 2 times a year, a lump sum for property tax, right? So it really just depends on what you prefer, but um, most people are first time home buyers, they're perfectly fine with just going ahead and paying an account with.
Uh-oh, you froze. Hello?
Am I still frozen?
Now, now you are. Okay. The service sucks a little bit, but I just wanted to have this live to share with everyone. It's so achievable. Like it's something that just makes a big difference when you just start the conversation. Whether with me, I will put you in touch with Angelo, and we can get just to know what you're approved for. Like that's the first step. Then we go to these wonderful sites like Zillow, Redfin. I can create a collection for you, and we can hit the ground running, with finding a home that meets the budget that you actually have, not the one that in your mind you think you qualify for. Because as we've learned in this conversation, there's so many extra fees, from closing costs to taxes to what insurance,
Yeah.
hazard, all those earthquake insurance. You got everything that comes into what you qualify for. So it's just important to get that real number down. And we don't bite. Angela won't tell me, your secrets. I like to keep it separate because sometimes people are like, oh my gosh, I know you, like, I don't want you to know what I make, or like, and that's why I always go, I keep it separate. I don't need to know all that. I just want the letter at the end of the day that says that they're qualified. So uh, your financial information and secrets is safe with Angelo. And that's it. I will need your bank statement though, so I will see that. But at that point, we're friends.
Hey,
So
before we cut off, if you have a little bit more time, I'll
uh-huh.
still have some people watching. Um,
Yes.
Go over what we look at income wise, like how we decide how much you qualify for.
Yes.
So what we do is we look at your monthly income, right? So if you're a salary employee, we look at your monthly income. We take your salary divided by 12, right? say your monthly income is $10,000.
Hmm.
The way we find out how much you're approved for is there's a thing called a debt to income ratio, right? So we look at your credit report and we look at all your liabilities, whether it be credit card payments, student loan payments, um, uh, car payments, whatever payments you have on your credit report, right? We add those all up, and then
Hmm.
what's called the proposed monthly housing payment, which is the PITI, interest, taxes, and insurance, to get up a number. So if you have an income of 10,000 a month, rule of thumb, your mortgage payment plus your credit liabilities can be no more than $4,500 a month. So that's how we do the.
Hmm.
So we look at how much you can put down as well. That's how we calculate income you can qualify for. Which is rule of thumb. Let's say you make 6,000 a month. You look at if you have nothing on your credit report at all, you can give you a $4,500 mortgage payment, which is pretty much about a $700,000 mortgage. But say if you have a car payment, student loan payments, credit card payments, we have to add that to it. It will take your monthly payment down. But that's how we do the qualification.
Makes sense. So all that debt, we got to pay it off, pay it down to get approved for more money.
Definitely. And even if your student loans are deferred, a lot of student loans are deferred right now, or and the payment's zero. Typically, we still need to hit you for at least 0.5% of that student loan. So if you have $100,000 in student loan, which I know is a lot, right? We need to hit you for a $500 payment a month.
Hmm. Okay, they asked, do you offer interest-only loans?
Yes, we offer interest-only loans. A little bit more difficult to qualify for. Definitely do, yes.
And I mean, right now, that's a great question. But with interest rates so low, like, is it like, why would you want an interest-only loan? I mean, like it would just kind of defeat the purpose of this low interest 30-year fixed deal, right? Or what?
People that are doing interest-only loans are pretty much betting that the market's going to continue to increase. So they're just pretty much saying, I'm just going to pay the interest on this house. I'm not going to pay my mortgage down, but the value of my property is going to continue to go up. And I'm either going to sell it within the 7-year period before this interest only period expires, or I'm going to refinance before it expires. But typically, a lot of like savvy investors do only loans because they're betting that the market's going to go up. So I want the lowest
Mm,
possible because your payment is going to be lower, but you're not paying on any of the mortgage, right? You're just paying the interest. But if the market keeps going up, even if you're not paying down the mortgage, you're still gaining equity, right? So it just depends on this specific scenario, but or we would have to be like on a personal loan to say what's the best loan for you.
And does that also qualify for like people get interest only loans when they want to do some kind of home improvement? So they take that lower payment and then they'll refi. Is that something that's still done right now?
Yes, I mean I don't provide construction or home improvement, um,
Okay.
but again, if you're paying less on your monthly payment, that's more cash you keep in your pocket, which is more cash you can use on doing home improvements or paying off other debt. So everyone's scenario is different, but that's definitely something that some people do.
Got it. Got it. Let me see. Are there any other questions you think I missed? Oh, we work great together. Thank you. Do we work outside of LA? Great question. For me, I'm like LA County. But Angelo, you are approved in other states, right?
Yeah, the main states I do loans in, California, Texas, Arizona, pretty much anywhere on the West Coast, and that's pretty much what I focus at. Yeah.
Awesome. Let me see. I think I got it all. If any of you guys have any questions, type it in, reach out, DM. We are both here. We're your team to get you to wealth. Another great statistic I always quote is that people who own homes have 44 times more wealth than any people who don't. I mean, just owning a home just gives you an asset that appreciates, and it's really how wealth is created. So I'm encouraging everyone to get a home, and Angelo is the great source to get you started, and I will find it and do all the negotiating on your behalf. So we're the
Definitely.
great team. We're a great team.
Brittany is a superstar, very valuable agent, and if you're looking to buy a house, I would definitely recommend using her. She's getting her clients' offers accepted when there's multiple offers on the table. She's definitely somebody who's going to fight for you for sure.
Oh, thank you. And I did not pay him to say that. I didn't. Thank you so much, Angelo. This was awesome. We were both virgins to live, right? I mean, like you never did a live, right?
Yeah, it sounds kind of funny, but yeah.
I know. We popped our live cherry today. I'm so excited. I got over it. I don't know what I thought it would be, but it was actually really cool. And it's a topic that I get asked all the time, and I'm like, I got to get this expert on to just let you know that it's something we can do. I see people doing it all the time. At less 500,000, there are homes and condos at 400,000 in LA. You can just start somewhere, and we can make it happen.
Hey, let's do it, man. Let's do it. But yeah, if you have any questions for me, feel free to shoot me over a DM or whatever the case may be. I'll be more than happy to help out.
Ah, thank you, Angelo. I'll be calling you shortly.
All right.
All right. Bye, everyone. Thanks for watching.